$300 million Abacha loot. Court dismisses suit against Attorney General and Minister of Justice Abubakar Malami for being statute barred. Again, states get bailout from the federal government worth 656 billion naira. World Bank projects $17.6 billion diaspora remittances to Nigeria as economy grows slow. Profit-taking dominates the Nigerian exchange. This is Business Express, and we are reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us on the business side of life, and we'll start by telling you that the National Economic Council Thursday disclosed that President Muhammadu Buhari has approved a fresh 656 billion naira bridge financing facility to the 36 states of the Federation. The support being processed by the Central Bank of Nigeria is to help state governments meet their financial obligations, and each state is expected to receive 18.225 billion naira over a 6-month period. It comes with a 30-year tenor and a 2-year moratorium at an interest rate of 9%. The facility is to help the states in repayment of previous bailout facilities guaranteed for them by the federal government. The Minister of Finance, Budget and National Planning, Zainab Ahmed, had on July 15, 2021, updated Council on the budget support facility to states and informed the Council that the deductions from state governments would commence soon as repayment for the previous bailout from the CBN subsequently. The states sought further support, leading to the idea of bridge financing. The World Bank has projected $17.6 billion diaspora remittances into Nigeria in 2021, representing 2.5% increase from $17.2 billion recorded in 2020. The bank gave this projection in a report titled Migration and Development Brief 35. Attributing the moderate increase in Nigeria's diaspora remittances to increasing influence of policies intended to channel inflows through banking systems. And Nigeria's economy is showing sustained resilience as the gross domestic product, the GDP, grew by 4.03% year-on-year in real terms in the third quarter of 2021. Moplang Dakok reports takes us through the latest GDP figures released by the National Bureau of Statistics.
Despite the global impact of COVID-19, Nigeria's gross domestic product GDP grew by 4.03%, sustaining growth over the last 4 quarters. Speaking on the numbers, Statistician General of the Federation, Simon Harry, expressed optimism that the economy is still showing sustained positive growth despite the decline of 0.98% from the second quarter of 2021.
In quarter 2, which was a tremendous improvement, the nation recorded a growth of 5.01%. And so all these were as a result of majorly the base effects of the negative GDP recorded in 2020. And so this trend has also continued and indeed is affecting the Q3 GDP, which is recording a growth of 4.03%.
The data shows that at the end of the quarter, the oil sector grew by 7.4%, while the non-oil sector grew by 5.44%. Fastest growing sectors were rail transport and pipeline, metal ores, oil transport, and financial institutions, while the slowest growth was recorded in oil refining, crude, petrol, and natural gas.
Now, Paul Alaje, partner at SPM Professionals, joins me to look through the GDP data released yesterday by the National Bureau of Statistics and its implications in the coming months. Mr. Paul, you are welcome to Business Express.
Thank you so very much for having me. Good afternoon.
Good to have you too. Well, to start with, coming from 5.01% to 4.03%, did you expect this kind of slow down?
Well, in the real sense, I would even say that we have performed relatively better, even though you are looking at as 5 to about 4%. What we should look at is the base year for second quarter, which was minus 6% compared to minus 3%. So what we've done, there is a level of improvement in Nigerian GDP where you use the base year, which is the COVID year 2020. So for me, I would say that we are getting stronger numbers compared to the weak year that we have in 2020. And if we continue to grow in this pattern, even if the next GDP figures reduce to 3%, is still strong because the base year for the fourth quarter at that time will be positive territory, which is 0.11%. If you remember, the time Nigeria announced a recovery from recession, we had 0.11%, which came as a surprise. So if you have 3% on 0.11%, it makes sense. So having 4% on this, for me, it's a good way to start. And I think it's something Nigerians should see that we've started having some level of growth and improvement from where we were in year 2020.
Okay. Having taken us through the baseline, can you further break it down for the common man on the street to get to understand? For a lot of people out there, from 5.01 to 4.03, it's a downward slope. But with the baseline and other indicators, it shows the economy is still performing well. Can you further break it down and let's get to know going forward, what should we expect, as well as the ratings of sectoral performances?
Okay, so beyond looking at the gross number, the number at the surface, because how much of sense can people make of something is 5% or the other one is 4%? It's just to be throwing the numbers, but to break it down into sector. According to the National Bureau of Statistics, when you look at sector by sector, you will understand that we seem to improve better now compared to what we had, because the base year, when you compare the base year, for me, the number you are bringing out is based on something. So when you say that you have a school where the cutoff mark is, say, 2%, and somebody scored -1 or somebody scored -3. For third quarter, for second quarter, we had 5%, but the base year was already -6. So this one, the base year was -3 and we had 4. So when you find the difference between -3 and that, and you find the difference, you see, we are not doing badly. To me, I think we have tried to sustain the growth we had in the second quarter. So, but if you can take it, if you can take some time to look at quarter-on-quarter report from crop production, which we saw when you compare that with what we had last, most of the figures return, and I'm talking of real GDP growth rate, most of the figures return positive, most of them, apart from crude oil, of course, and that's a point of talk. If you have time, I would like to talk a bit about that, because crude oil is so very important to Nigerian economy now. We are still doing average of about 7%, but when you look at the quarter output, it actually reduced compared to what we had before, which is a lot of worry. But agri crop production improved, livestock improved, quite a number of improvements all the way down, even though some of them had slowed, because at the third quarter of 2020, we have started seeing some relaxation of restrictions, of COVID restrictions. So economic activity took place. Now this year, talking about between July and September, when you look at those 3 months compared to what happened last year, a lot of organizations were not functional, a lot of businesses were not fully open, unlike what happened this year. So this year we have gained more economic activity and there are improvements. That, I can tell you, is what has happened in what National Bureau of Statistics was trying to compare for us as a country.
So is that to say the disruptions we have witnessed over almost a year and some months behind, talking about the global supply chain, is being eased off and we're having improvement, which also shows in these figures we are having?
Well, yes, it's just balancing. And we're going to experience it to the end of first quarter next year. That's when we're going to experience it. So whatever happened, we should have balanced. So we should not expect, like when we add 5% GDP figures, I saw a lot of people being happy. I said, you should not be happy or sad. There is no, this is what we should expect. In fact, 4% is what we should expect. The next GDP figure I'm expecting should be between 3%, around 3% or a bit above 3. That's what I'm expecting. Because we now need to get back to pre-COVID period, which is what we should expect from second quarter 2022. Because COVID actually impacted on our economy. It brought it down, then it started growing up back gradually, which is exactly what this report is showing.
Okay, looking at the last monetary policy committee meeting for the year, it's coming up in a week. How would these figures affect decisions of members at that particular meeting?
Well, I want the members of the Monetary Policy Committee to still hold rates because it will be too quick for you to say you want to increase or reduce rates at this time, even though the Monetary Policy Committee decision is so very important to what will happen to investments. It might have impact on inflation to some extent. Maybe exchange rate, maybe not. But to a large extent, because the economy is still very volatile right now, and we are almost getting to the end of it. Like I mentioned to you, by end of Q1 or beginning of Q2 2022, we should have had a balance to some extent within the economy. Recall that COVID itself was an exogenous variable that our country and countries of the world were not expecting. Now, how we managed it is what we showed difference among countries. So how we are managing it is not, it might not be the best around the world, but it's not totally bad. As we are managing it, we have started seeing positive growth from 5 to 4%. Recall that, you need to refer to base year, which is -6 to -3%. So when you see the gap between -6 to -3 is about 3%. Between -3, if you remove -6 or -3, you have about that gap, that 3% gap. But what you have seen in the reduction is just 1%. So for me, to be technical and not just to talk around the figures, to be very technical, there is actually an improvement in the real sense of it. When you look at the numbers, unlike, we are just looking at the number at the surface, how do we drop from -5 to -4? No. Compare what happened, what you were comparing the numbers to. The percentage was percentage of what? Of the base year. So in real sense, we actually improved. In real sense. But when you are comparing it to, let's compare the number at the surface, then you can say the number grew at a reducing rate, which would be very correct also. So for me, I think we have not done totally badly, but government and all of those concerns, policymakers, should now focus on policies to sustain this growth between 3 to 4%, even though what we need is double-digit growth. But realistically, based on policies government has been turning out over the years, it will be miraculous if we get those double-digit growth. But talk about what is real and what we are seeing. If you can sustain your growth at 3% to 4%, over from now to the end of the year, you have just one more quarter. This year, we are saying whatever policy we need to put in place to sustain the growth at that rate, it will be a good start. Then by the end of first quarter next year, we can now say we have a real fresh start, and the world is also practicing the same all around.
Okay, Mr. Alaje, you're advocating that the MPC should retain the rates that we've had for the last, how many years now, which is to say we are doing well. What are other policies that you think should be put in place, or you think more needs to be done to ensure that this growth is sustained, that we get to go to pre-pandemic period soon?
Well, it might not mean we are doing well or we are doing badly. It simply means that it's the limited choice that we have. So what Monetary Policy Committee has been doing is sometimes to choose between the devil and the deep blue sea. So it does not mean that is the best, that is the best option in the world, but the best option among what is available. So they've been trying their best. They've been trying the best possible decision open to them, such that the impact of COVID will not be too much on the lives of the people. And that's what I've observed in the past. And that is why I also support. I spoke with your colleagues a number of months ago, and I told her that I would encourage the last MPC meeting to hold rate, and rate was held. Now, another policy government needs to make very quickly. Oil output have continued to decline. As we speak, Libya has overtaken Angola, now overtaking Nigeria as the largest oil producer in the world. And these are figures released by OPEC. Not in the world, I beg your pardon. In Africa, Libya has overtaken Angola and Nigeria as the largest oil producer in Africa in terms of output. Nigeria oil output have continued to reduce. We need to know that even though we are seeing 7% in our GDP figures, we need to be worried because over 80% of government foreign reserves from oil. So we need to put more investment in oil. So authorities, particularly now we have the new policy around oil sector that government adopted, Petroleum Industry Act that has just been passed. For those in charge of the stream that is responsible for output, it is important for them to quickly encourage. We have Total talking about bringing up one of the new oil field to come up in 2027. We have another, I think, ExxonMobil talking about maybe 2023 or 2025. Then we have another oil giant talking about 2029. Government need to encourage these oil producers to start this moment today, while we don't neglect other sectors. And I've said time and again, when people say that we need to leave oil and start focusing on other things, you don't want to start feeling the impact when no other major sector have developed. This is GDP, it's not revenue. What government spent is not GDP. The money government spent is revenue. Even though your GDP is growing, is your revenue also growing?
Which is to say oil and gas remains a vital mix in the energy mix of not just Nigeria, Africa, but it's a global thing. Thank you so very much, Mr. Paul Alaje, SPM Professionals, for sharing your thoughts with us at this particular point in time.
Thank you so very much for having me.
Thank you. Well, moving on, retirees of wound-up agencies are being owed 90 billion naira arrears by the federal government. This is coming from the Pensions Transitional Arrangement Directorate, PTAD, at a workshop on pensions correspondence in Abuja. The Directorate disclosed that the biometric verification number, BVN, has been a game changer in addressing infractions such as ghost beneficiaries from the system.
Very robust relationship between PTAD and the media. Correct all misrepresentations, distortions, and evasion, and inform them of next steps we intend to take as we work hard to ensure that the welfare of our pensioners is sustained.
The Center for Strategic Leadership and Youth Orientation has identified crowdfunding as a means of complementing government credit support to entrepreneurs with the theme Gaining the Right Skills Set for Transformational Leadership and Wealth Creation for Youth from across Nigeria. Speakers have harped on the need for alternative sources of funding for businesses.
Assuming we want to have an industry that is worth 1.5 billion, we can support ourselves using our numbers. How? Assuming it requires that this industry will take out of poverty line minimum of 2,000 persons within 1 month, 150,000 of our members contributing 10,000 naira have gotten 1.5 billion that can raise these industries. As simple as that. This is what we have been adopting. This is why we have taken it as a responsibility to ensure that we have the numbers to change whatever.
And the federal government is set to engage 1 million rice farmers through the Central Bank of Nigeria for the 2021 and to 2022 dry season farming activities. Musa Baba Aliu reports that the initiative is to further boost the country's rice production.
There are about 12 million farmers cultivating rice across the country under Rice Farmers Association of Nigeria. The farmers are all engaged under the Central Bank Anchor Borrowers Program. 1 million of them have indicated interest in participating in the 2021-2022 dry season farming. And here are officials from the Central Bank of Nigeria, farmers associations, and input producers discussing the modalities for the farming season.
What we've done is to look at the economics of production. What will it cost per hectare to produce rice in Nigeria? And it is now agreed that all those that are providing inputs will provide their price, and it was done openly. They have all quoted their prices. Everybody had it. And this is now going into the economics of production and submitted to CBN for approval.
Yeah, now the cost of production, the insecurity, and a lot of things are affecting the prices. So there is need for that harmony, that synergy between, government authorities, so that we all be properly targeted.
On that note, we now move to the global commodities market. Profit-taking has continued to drag down stocks at Nigeria's exchange. The closing figures are not yet complete as at this moment, but the all-share index and market capitalization dropped, and investors exchanged 199.5 million shares valued at 3,256 billion naira in 3,917 deals. Next is the global market with Bosede Ebo.
Hello and welcome to the Global Market Review Updates. European Central Bank ECB President Lagarde on Friday reinforced her view that Eurozone inflation will fade and said the ECB should not look to tighten monetary policy as it could hamper the bloc's recovery. However, markets were lower on Friday as investors monitored the outlook for inflation and central bank comments, along with a resurgence of COVID-19 on the continent. In Asia, Hong Kong share fell Friday, extending losses from the previous session as some of Chinese biggest tech names remained under pressure. The benchmark Hang Seng Index declined 1.07% across 25,049.97, while the Shanghai Composite topped 1.13% at 3,560.37, and the Nikkei also topped 0.50% across 29,745.87. U.S. stock futures were mixed early Friday as concerns over a resurgence of COVID-19 weighed on markets. Futures on the Dow Jones Industrial Average fell 0.39% at 138 points. S&P 500 also dipped 0.12%, while Nasdaq Composite gained 62 points at 0.38%. African market had a fluctuating week, with some stocks striving to sustain the green arrow, like the Nigerian Exchange Group, the Ghana's GSE Composite, and Namibia's overall index, while South Africa's JSE Africa Top 40 and Tunisia's Tunidex wrapped the week on negative notes. That's the global market updates. I am Boss Sede Abel.
Thank you, Bosede, and that wraps this edition of Business Express, and of course, the last for the week. Remember to keep in touch with us. Do send in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on ATA's channel. Business Express returns Monday at 3 p.m. Be safe out there.